Hello, welcome to the European Open briefing for Wednesday, August the 2nd. I'm Rafi Bajan, currency analyst at XM.com, and we're going to be looking at what's happening in the currency markets today. So we're seeing a bit of a rebound in the US dollar. Yesterday, of course, it did reach fresh 15-month lows. That's the dollar index. So it was looking a little bit oversold. We also had another record high in the Dow Jones yesterday, so that also provided some support to the US currency, and of course we are seeing a bit of positioning taking place ahead of Friday's non-farm payrolls report. The euro and the pound, though, have managed to hold near their highs, but there is some weakness in commodity currencies such as the Canadian, Australian, and New Zealand dollars. The Kiwi, notably, is down this morning due to disappointing jobs data out of New Zealand, while weaker oil prices are weighing on the loonie. Let's start now with the dollar. We can see in the chart that there's a bit of divergence going on with the dollar index and the dollar-yen pair. The risk-on sentiment that we're seeing this morning, mainly on the back of a strong close in Wall Street yesterday, and which has spread to Asian markets this morning. Not so much to the European markets, at least not at the open. The dollar-yen, that's mainly due to yen weakness. It's up at just above 110.70, while the dollar index, although it has recovered from yesterday's 50-month low of 92.78, it's just about managing to hold on to the 93 level. And of course, not worth mentioning that dollar yen did reach a 7-week low yesterday of 109.91. The reason why we're seeing strong equities this morning is because Apple announced better than expected results yesterday, and that it boosted component suppliers in Asia and a bit as well in Europe. On Friday, we've got the non-farm payrolls report that's going to be closely watched, mainly because of the growing doubt about the Fed raising rates for a third time this year. Yesterday, we had more mixed data out of the US. The personal consumption expenditure data showed consumption rose only modestly in June, while the Fed's preferred measure of inflation, the core PCE price index, although it did pick up a little bit to 1.5%, it was still well below 2%. Let's have a look at gold now, because yesterday it had reached a 7-week high. It is down this morning due to a slightly firmer dollar and the improvement we're seeing in risk appetite. The Dow Jones did close at a record high for a fifth straight session, and in Asia, the MSCI the MSCI index for Asia Pacific shares, excluding Japan, hit the highest in 10 years. Although in Europe we are seeing a slightly more muted start to the trading day due to weaker financials and mining stocks, but overall we do have quite a bit of risk on sentiment this morning. Looking at European currencies, the euro, it did weaken a little bit yesterday before picking up again back above the 1.18 level. That's not too far from the 2.5-year high we saw on Monday. We had the preliminary flash GDP estimates out of the Eurozone yesterday. We saw the Eurozone economy expanding by 0.6%. This was in line with expectations, although we did see a small downward revision to the prior quarter, but the annual rate, we saw that accelerating to 2.1%. That's the best figure since late 2015. If you look at the pound now, we can see that yesterday it touched a 10-month high, 1.3244. This came after stronger than expected UK manufacturing PMI, which rose to 55.1 in July versus expectations of 54.4, so that's quite a big upside surprise there. We saw finally the weaker pound benefiting UK exporters. We saw new orders jump to near the all-time high from way back in April 2010. We have the Bank of England policy meeting coming up tomorrow, as well as the inflation report. So it's going to be interesting to see whether or not the bank is moving closer to raising rates. But for tomorrow's meeting, no move is expected. Let's look at the Aussie and the Kiwi. We did have jobs data out of New Zealand this morning. We saw employment growth declining unexpectedly by 0.7% versus expectations it would rise. We saw the unemployment rate dipping from 4.9 to 4.8%, though that was mainly due to a drop in the labor force participation, and wage growth remained modest, rising by just 1.6% year on year in the second quarter, and that led to the Kiwi dropping to a 1-week low of 0.7414 against the greenback. The Aussie, though, although that had been in decline since early yesterday, its decline was halted by better than expected building approvals numbers out of Australia. We saw building approvals in June jumping by 10.9% month on month versus expectations of 1.5%, and follows the May's upwardly revised 5.4% drop. Looking at oil prices, yesterday we had the private industry survey from the American Petroleum Institute, which showed an unexpected drop in US crude stocks. Last week they were down by, unexpected increase rather. They were up by 1.78 million barrels versus expectations of a drawdown of 2.5 million barrels. That's why we saw that reversal in oil prices yesterday. Prior to that decline, oil prices had reached a 2-month high. It's too early to say, of course, whether or not this is just a correction or a longer-term reversal, but we would also have the US Energy Department's official numbers coming up later today, which should also be watched. The loonie, as expected, did weaken as a result of the drop in oil prices. We saw USD CAD climbing back above the 1.25 level, moving further away from its recent highs touched early in the week. We've got employment numbers coming out of Canada on Friday, and they're going to be important given that last week we had better than expected monthly GDP figures out of Canada, and of course the Bank of Canada did raise rates early in the month, and back in July, and is likely to raise rates one more time later this year. Let's have a look at today's economic calendar. We can see there the New Zealand jobs data. Out in the European session, the main focus will be the UK construction PMI and the producer prices. It's going to be quite a US session with just the ADP employment numbers, so that's going to be interesting to see ahead of the Friday's official jobs figures. And we're going to have a couple of Fed speakers coming up. We've got Cleveland Fed President Loretta Mester due to speak at 15 hours GMT, and San Francisco Fed President John Williams. He's due to make an appearance at 19:30 GMT. That's it from me. Thank you very much for watching, and have a great day.